Hello everyone and welcome back. Well, we're certainly at critical points heading into the big Friday close and options expiration in the US. Stocks, cryptos and commodities are all heating up, and this means that there are a lot of opportunities just around the horizon. If the bears manage to bust through to a new low, we could see some capitulation. But if the bulls can take control at this level, there could be a lot of opportunity to the upside as well. Let's take a look right now at all the key levels. See you soon. Well, welcome back everyone to the Daily Show here where we talk about stocks, commodities and cryptos. This is for the market close 19th of May 2022. And as you would know, starting with the Fear and Greed Index, we're in extreme fear. We're at a critical options expiration that we will cover off on today. And we're also at a point where the markets are about to make a major decision. It's an inflection point effectively. Apple was probably the standout for the last 24 hours. It moved down. It actually broke underneath our demand zone and closed. And it was a story of big stocks like the big tech falling, while at the same time the smaller stocks, the smaller tech, had some nice rips on them. We suspected this may be the case when IWM, the Russell 2000, held up better in the last 24 hours of trade, and markets rotated a little bit into the risk on, specifically the riskier stocks that have been beaten upwards of 80 to 90%. It was sell-off, rip, sell-off, rip, sell-off, ends up pretty much flat for the session, and that created some consolidation or a coiling on the smaller timeframes that we need to look at very closely, because it's going to show us whether the bulls or bears really win out here on this all-important Friday close. But the other things that occurred was gold. Gold came good, and we suspected that this would occur on the channel. That gold was really finding heavy demand and it just ripped through the session. So if you were in gold or you were looking at gold, you did very well. If you were in things like XLP, which is consumer staples, it didn't do so well. And as we mentioned, the hyper growth stocks, TAN, clean energy, any of the hyper FinTwit kind of stocks, those stocks did very well for the session. Some of them were upwards of nearly 10% and a lot of 5s and 6s throughout the session. Now, where are we in a market? Well, we're very close to, of course, a technical bear market. And you'll notice that when we talk about bear markets, they've added a few in here that aren't technical bears, but certainly were going down. 19.8%, 19.4% reached in 2011, similar to now in some ways, and 2018, obviously a midterm election year. These two times were what most bulls hope is happening here on this market. We don't go too much further. But when we do go further, what does that mean? Well, unfortunately, bear markets do tend to last around 12 months, around a year to 18 months in period time. And if we go into some kind of recession here, which we could already be in, I know a lot of people definitely consider we're already in a recession, which is valid in some ways, then we might see a lot more. People are starting to talk about 3,400, 3,500 taking off everything that we put on since the pandemic on the markets. I'm not there yet. But of course, if we break a big low here and we go to a new low onto the weekend, that's going to be pretty damn dangerous. Let's talk about VIX and fear. Where was fear? Well, fear rose. It didn't quite get to 35, which has been a big sticking point here for markets, and it started falling back off. That's due to stabilization. Remember, whenever the market stabilizes or doesn't move too much, the fear, that is the VIX, will decline. And it was going down through the session. A lot of people adding in puts. You can see with the PCC, huge amount of puts. The ratio went back well above 1, which shows people are fearful. Could this be Wall Street really setting up for a trap and just getting people to put in as many negative positions as possible? You'll notice the puts have been quite high here for a considerable amount of weeks as we move into the most important options expiration for the month, the third week. So PCC quite high. Put calls pretty damn high there. Dr. Copper, not too bad in the last 24 hours. A lot of people look at copper as economic stability. Obviously, it shows a little bit to do with the economy and builds and demand. And we did see it shoot through the roof in terms of the demand coming in after the pandemic. It's now sitting in what we could call a Wyckoff distribution, but it has been finding support at this stage. So Dr. Copper, pretty good on the last 24 hours and certainly up. Let's look at the US 10-year. As we suspected, it started to drop again. US 10-year looking weak at this stage, and that could mean that we've got peak inflation in. Also, if the US 10-year does continue to come down, that's a good thing for interest rates and all the problems. And the main reason this is happening is most likely due to the market fall. You're seeing fall in the market. Obviously, that's going to hurt people's feeling towards being rich. That's going to kill demand. And really, this whole year has been predicated on this: supply and demand. And I've said this several times. The most important thing in supply at the moment is really China's COVID policy. If they take that away and they say no longer do we lock down, we're not going to do that anymore, then I think the markets will be given a go signal to actually start buying. But at this stage, that is the big concern, or at least the one that if I cut through everything, that's the one I really think about. Demand's being dealt with by the Fed to a degree, and also, of course, the market coming down makes people feel a little bit worse, which stunts the actual demand for products. And you'll see that throughout anything. If you want to go and look at collectible markets right now, all are falling. A notable one might be watches. Most people probably aren't into it, but for anyone that's been following that particular market, some watches grew to 5 or 6 times their list price, which is just ridiculous. And a lot of those have lost 30, even upwards of 40% in the last couple of weeks. So a lot of bubbles popping here across multiple different asset classes, including, of course, crypto. Let's talk about dollar index here, and you'll notice the dollar index has moved all the way back down. We suspected it would, and this has been generally good for inflows potentially into the market. That's a positive first sign here for the markets. This was the key zone of demand that we saw broken. The market has since rallied off that area. I did suspect we might come back to here. We didn't quite get there, and then we sold off. Oh well, there's other trades to be had around this, and we're moving back down. The biggest area here is the 102.40 now. Once we get through that, you're really changing timeframe trends on a lot of timeframes. So at that point, if you breach through here, right around this demand area here, 102.40, you're really saying, okay, it looks like the dollar has topped for this period, and it's been in a giant distribution, and that giant distribution is now ready to make its way down. And remember, if we do have dollar switch, that could mean that money is flowing into other assets, bonds, stocks, risk on assets. Very important we see what happens here with the dollar. Now, a lot of people are reporting on gold all of a sudden. They're saying, oh, the hedge is here. Gold's not really a hedge so much as it is a currency. But in this case, there are a lot of things that are positive towards gold. And remember, I've said since it comes down to this demand, we've talked about this together. We've talked about this idea that this level was critical. Gold's not out of the woodwork yet. It doesn't mean it's going to go up huge, huge, huge. It's about to approach the first real big test for around that 1853 to 1860 zone. But there were some nice levels here. It's broken the downward trend. You guys know I love that kind of thing, the anti-technical analysis kind of play. And we saw a beautiful pickup off here. I was hoping that gold could get back down to around 1800. That was the super demand zone. But once we saw this place, and it was the double bottom, it came back down and just went boom. And certainly for day traders, this was a pretty good one. Out of interest, is anyone actually trading gold right now? Let me know in the comments down below. I'm always interested to see that. And remember, if you like any of these things, indices and everything else, do subscribe, because we cover all of these markets on the daily here on the channel. And it's awesome to have you guys here as a community. Let's move over to US oil. Another one that I've been kind of negative on, even though the charts have started to look a little bit more positive in recent weeks. There are multitudes of reasons for this, but remember, we do have the long leg doji up here showing some form of equilibrium in price and also indecision in price. And we really have the resistance. So that's a big resistance, and it's fighting with the bulls and the bears at this stage. If oil breaks back down again, which I suspect it may, it could really tank all the way back down to the 100, if not even 93 zone. Now be careful here in the oil markets. I know a lot of people are bullish on it, but with the 10-year coming down, with potentially inflation peaking from that aspect, doesn't mean inflation's gone, by the way. Peaking and inflation gone are totally different things. We might have just seen the highest level read on it for a little while. And you may not believe that, but at least that's something that I'm looking at. This is very, very concerning in terms of there's a lot of volatility here and a lot of powerful forces behind these ones right now. Natural gas is similar, a lot of powerful forces. Obviously, it's now tried twice to break 860. It's coming down, and this looks like a market that could be around to tip and actually move back down. Be careful there. Tesla, as we suspected, hasn't really been doing much. Now, Tesla is under all sorts of fire right now. Is it on a demand zone? Yes. Is 700 a good level? Theoretically, yes, it's been a level that many buyers have purchased before, and you can see that initial reaction to it was incredibly aggressive. It's now come down though twice to these levels, and what you'll notice is it's gone lower peaks at this stage. So effectively from a TA perspective, people will draw through here and they'll say, look, we're making a series of lower peaks, lower highs. I think Tesla needs to do something for buyers here. That's not what I like coming into a buy zone. That's showing weakness coming into that level. So Tesla needs to start knocking off some of these zones. This resistance here would be a good one for day traders to be looking at. And if that occurs, then of course we're breaching that downward trend, which allows us to then put pressure on these levels. And as we take out these levels, you become more confirmed that we've based. And at that point, you're talking about an accumulation base. So I think Tesla, the next 24 hours, probably the next couple of days of trade, we should get a bit of an idea. But for bears, I mean, you know what you guys want. A close underneath 700. That could be dramatic. Look at this. Huge level. Huge level. Closes all around there. If you get a close underneath, that means the power of the bears was strong. And that may lead, and it's probably going to happen with the rest of the market, to some serious falls. I could see next stop somewhere around this 640, 630 area, and possibly a movement all the way down to the 550 for Tesla at that stage. So be careful here. It's the one stock that I feel, based on the current market conditions and what's happened over here, this is just so unusual. These types of swings are not standard for stocks. And when that happens off euphoria, you start to get a little bit concerned about whether there's a problem here. What do you think about Tesla though? I'm also interested in your comments down below, guys. Apple, let's move over to that. Big close here, actually down. Usually you'd say that's not good at all because this is the big kahuna. Was that a max pain that's been caused on Apple, or does this mean more falls are about to take place? I mean, basically Apple's next huge support, other than just being this little bit of resistance potential area, which not really usually that strong, would be down in this area down here, which is around 123. So if Apple starts to tank, can the market even hold up with the biggest stock really doing something like that? I think that Apple is looking shaky. I wouldn't say that this looks strong, technically long or anything. It looks mostly short. So be careful there. Hopefully it can roll around, but you know, I don't really like to work on the world of hope in these types of markets. Another thing is Microsoft. A lot of people are looking at this. You know, I love Microsoft. It's my favorite stock in the market. I can see why it's coming down. Obviously it was overpriced in terms of most metrics, but it's got a moat like no other. And if you're not familiar with moat style investing, that's probably my favorite way of figuring out whether you want to hold a stock for a long time. How hard is it to get into the business? And with Microsoft, there isn't anything harder. It's almost impenetrable. It's got the moat that you could siege that castle for about 50 years and probably not get into it. So that's why I like Microsoft. But you can see the big demand level down here. And the next 24 hours, super important for this one and the rest of the market. Let's check out the DAX. How's it going? So the DAX here, a little bit of a rally on the 1 hour. Let's take a look at the daily. It's doing its best to try to hold up as much as it can. Nice movement around. It actually did better than the US market in terms of it came and it filled that gap. So remember, there was a gap around here. This was our area that we were looking for demand. And it bounced off it and just went bang, straight back up. So strong move here from the DAX. Can it put in another day to get back above? As you guys know, this is the big area up here. That's the huge zone that the DAX needs to clear to really start ramping into the next levels. But yeah, positive looking candle, first one in a while, and certainly does show that there's that potential for the slingshot trade up, but it will be followed by the US market in general. Let's move over here to IWM. Let's talk about the Russell 2000, and let's just quickly look at this market. You can see again, held up pretty well considering. A lot of other markets are on their lows again, but not the Russell. The small caps holding better, and we reported on that in the last 24 hours. Check out the top of this box. See that area there from the last 24 hours? If markets rip again, they get through there. Again, day traders, they're looking towards that next level. So Friday, could all of this be open here for the Friday for IWM? It's certainly possible. New low. Unfortunately, I could see gap fill at that stage and back down to 169. I think you'll find the Nasdaq and the S&P will be leading the way on this. Speaking of Nasdaq, pretty poor close here. 2 rip rallies, both sold off. The second rip was weaker than the first rip. Markets held the low, and what you'll notice is while they were holding the low here, they were boxing up, they were coiling. So this coil now becomes the decision for the next 24 hours, and indeed potentially for the next few weeks. This zone down here is incredibly big. And if you look at it on the futures, we go over here to the futures, you'll see the long leg doji. So the futures market's already tested this 11.7 before. Let's go and look at the 1 hour here for this. So you'll notice that the futures at the time of the recording are improving a little bit. The only thing that I get out of this that looks a little bit different to the real market and makes me feel slightly more positive is that it had a swing here to the downside. That swing then got reversed and it did buy up. Admittedly, it sold twice, but it's still holding, and it's sold back to a level where it's tried to find some demand through here. So it is looking a little bit more positive, and the market here is turning. So hopefully we can get a new high put in the next 24 hours and then move towards that 12.2 zone. So 12.2 and possibly even more. If this gets underneath that 11.7 zone, ooh, I'm not sure. I think if that close happens, the bears are in full control. And if that occurs, you know, get ready for capitulation, potentially week 8. And that would be pretty bad. That would actually put us into so many weeks in a row negative. It'd be almost the first time in my trading investing career I've ever seen this, I think. So this would be 1, 2, 3, 4, 5, 6, 7 down. And I think that's a record for me anyway at that point. It's very rare. I mean, we've done the stats on this. We've obviously shown you that 6+ weeks down is incredibly rare without a rip rally. And at this stage, we still haven't seen a rip. So imagine if we get a close underneath here. Not good. Stats would show that maybe there's one capitulation in it. And then, of course, a big knee-jerk reaction. And that could take us all the way down to 11. So be careful here over the next 24 hours. So much at stake on those small time frames. S&P 500 is very similar. You can see it closed really pretty neutral, trying to hold up as best it can after such a huge fall. And if you look at something like the 2 hour and things, look at these candles. They're pretty horrendous. And this is the real market. So each rip was met by sell demand. Now, if there's sell there and you take out those highs, what are you doing? All the shorters that were here are getting squeezed. So that's where, of course, that rally comes in. So you can see really where the market's going to fight with each other. The lows and the highs, and everything in here is noise. And that's what's going to be happening, I think, for the Friday session. US 500, you'll notice here, again, a tap of those lows almost to the pip. Futures market action traders would have been like all over that, I'm sure, going, I'm going to try to buy the dip after so much capitulation. And we've put in one new high, which is again a slight positive here for the market. So let's see if we can get that rally going on and maybe a pull up. Now we'll talk about options because that could be a big reason why the market may want to pull up. Max pain for Friday sitting at 414. So we suspected it would come down. It has. And you'll notice quite a few options closed at the 400. So the open interest is dropped. But the 390 remains incredible. 110K, 110K at 380. Both of these areas, huge defense of puts coming into the Friday. Usually, obviously not always, it's not a guaranteed thing. Markets try to defend these walls of these huge amounts of puts and hold above them through the session. Doesn't mean max pain, but these levels are usually defended. So something interesting there to be looking at as well to add into your analysis. Bitcoin, hovering, as we've mentioned, 32 is the real buy here in terms of that's where you're starting to move through this session, and we're making lows here, holding up as best we can. Ethereum is very, very similar. It's a little bit weaker than Bitcoin. Again, it's coiling and considering its next move. I think it's really waiting for the stock market to make its big one. If you haven't already, come follow us on Twitter at FXEvolution. And if you enjoyed today's video, consider subscribing, smash that like button, and we're on the road to 100K now. And as we said, in the future, we will be giving away some prizes just to members of the community for helping us out to get there. So obviously, thanks so much for following. Thanks so much for subscribing, and we appreciate each and every one of you. Have a great weekend, have a great Friday, and best of luck out there. Bye for now.